Every legendary trader has a beginning. For Nicolas Darvas, it wasn't Wall Street, it wasn't a trading floor, and it wasn't even in a broker's office. His story began in a nightclub in Toronto, when a dancing contract was paid, not in cash, but in shares. That single moment, during what he later called the Canadian period, lit the spark that transformed a professional dancer into a disciplined trader. Nicolas Darvas studied economics in Budapest, but chose the stage as his career. He became a touring ballroom dancer, traveling across Europe and eventually North America. It was during one of these tours in Toronto that the unexpected happened. Unable to pay him in money, a nightclub handed him stock certificates. Curiosity grew into fascination, and he began to trade. Darvas entered the markets the same way many beginners do, with tips, rumors, and guesswork. The first trades looked promising, but losses quickly followed. And with every loss, a truth revealed itself: the small trader is often the last to know. By the time a tip is whispered, insiders are already unloading. These painful lessons shaped his first rules. Never chase hot tips. Be cautious with broker recommendations. Stay away from thinly traded penny stocks. These rules, forged in failure, became the foundation for discipline. Touring didn't stop his education. Darvas read obsessively, hundreds of books on speculation, trading, and psychology. He had no access to live market data, so he turned to Barron's Weekly. Each issue became his market window, providing price and volume tables. From these, he began to see that success wasn't in rumors, but in patterns. Price and volume told the real story. In Canada, he changed from a gambler into a student of structure. He started using stop orders to control risk. He stopped hoping and started planning. Most importantly, he paid attention to stocks that demonstrated strength, rising prices on heavy volume. This thinking planted the seed of the method he would later perfect, the Darvas Box. The idea that price defines a range, and a breakout above that range is a powerful signal. Perhaps the greatest lesson of the Canadian period was not technical, but psychological. Darvas learned that pride and optimism are dangerous. The market doesn't reward hope. Only a cold, mechanical approach, based on rules, discipline, and unemotional execution, allows a trader to survive and prosper. As he later said, there are no good or bad stocks, only those that rise and those that fall. The Canadian period didn't make Nicolas Darvas rich, but it gave him something far more important: principles. He left Canada with a respect for price action, a belief in strict risk control, and an emerging method that would later turn him into one of the most famous traders of the 20th century. This was just the beginning. In the next chapter of his story, Darvas steps onto Wall Street and transforms these rules into a complete trading system. If this story gave you value, make sure to like this video and subscribe to the channel. More chapters, more lessons, and more insights from the great traders of history are coming soon. Don't miss the next episode, where Nicolas Darvas takes his first steps into Wall Street.